Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 30th of September. All right, as we come into the end of the month, obviously, same thing. Not a lot of clear data, but we do have clear direction on what's been going on. The US Treasury yields have been going up, and that they sort of ratcheted up like a day or so ago, and now they're sort of drifted back. This is pretty good to see. And there's been no panic across the equity markets, which is also very good to see. Looks like the market's already shifted for potential higher interest rates in the US, and it's been factored into the market. The dollar move is just really starting to happen, but it's not causing panic stations across the other financial markets. And that's a good thing. It means it's been accepted by the market, and we should start to see some orderly activity from here. Now, with those Treasury yields, right, they're up. The 30-year was up at 210 yesterday. As I said, they have moderated somewhat. Now, let me just come over to the major currency pairs. I was just looking through this with the trade team yesterday. There's a very clear correlation between dollar yen and the US 10 years. See, this is the problem. If you just follow correlations, right, they call them correlation nuts, you're going to come unstuck all the time because the correlations are in and then they're out. Now, the driving force, no doubt, behind the recent rally in dollar yen was dollar driven, right? The yen is a neutral currency. So without any other sort of issues going on, the dollar screams higher. But that move up to 210, I think it was the previous day on the US 30 years, like or across the US treasuries for that matter, like it went too far. And it's good to see the dollar starting to kick in, even though the treasuries are starting to mellow out, right? You usually get this. I've been sort of saying this for some time. Like the euro has had a really nice trend, right? This is a short to medium term trend, which is now building into a potentially longer term trend. We get next Friday's or Friday week's non-farm payroll strong. This trend will be in play. Euro will be heading down to 110, right? That's what you got to understand and accept. Sterling, well, fell out of bed, especially around that oil, the shortage of oil in the UK petrol, right, was the catalyst for it to really kick in. And sure as hell, it's caught up with Euro as well. And the two antipodeans, the Aussie and the Kiwi, have finally capitulated as well. Oil pretty steady, but dollar CAD, the strong dollar is biting in as it is moving with the dollar index and dollar Swiss. So we've got uniformity price action now across all the major currency pairs with the dollar move, right? If this isn't telling you exactly what's happening, well, then you're missing the boat. Now's not the time to try and pick the top or like the top of the dollar pairs or trying to pick the bottom, like trying to pick levels down here to get long and maybe see a bounce. The bounces from here, in my experience, will be limited, right? I can see, for instance, if I just focus in on Euro, like it's just gone below 116 the figure. There's no sort of bounces off this level. I think if anything, you might see it back towards 116.30 at best. It's just going to keep going down, right? There's nothing to stop this. And the good thing about this week, last week of the month, there's no major economic data releases, so there's nothing to stop it, right? You're looking at the market. As I said, it was a bit strange going back a few days ago when the US treasuries, well, they've rallied all week, but they really went through the roof. And the dollar did move, but it didn't move much. It's just a matter for everything to sort of sit and then everything sort of matches up where it should be. And that's why I think now we're starting to see like the 116.80 down to 115.90. We're starting to see the dollar move, the dollar value catch up with where those US treasuries are, right? And as I said, this is sort of factored in. So this isn't like, this is the real level of the currencies right now. And going forward. So there's no sort of dramatic moves on the treasuries that I can see coming from here unless there's a geopolitical event. The treasuries are pretty cool. We're basically resetting, and the new value for these currencies is down here. So we see dollar strength from here. The dollar block starts to fall again, right? So this is the new value for all these currencies. And that's what you have to think. This isn't just a little flash in the pan like we've seen over the last year where we start to see the dollar move and then it stalls. The real confirming fact is that the other financial markets, like the bond markets and the equities to an extent, are confirming the move, right? This is confirming that's what the dollar's doing. So get on board. All right. So when you are looking at this now, I've been saying this over the last or the daily market insight for at least a week, and trying to get you guys sort of focused on this. The area yesterday, the hourly charts can be a lot of noise. So I'm on the wrong page here. So like looking at like the euro had already sort of broken down and sort of was tweaking away without too much momentum. Sterling had that big knee jerk. It's well into the downtrend now. Aussie and Kiwi were the two pairs which hadn't broken down. They were sitting targets, right? Sitting ducks, waiting for they will catch up and follow their big brothers or their big cousins, the euro and sterling, right? They're all quoted the same way against the dollar. That's why they call the dollar block. They all move together. It's just a matter of the timing kicking in. Now, I can see this is what you got to think of. Like, okay, what's the strategy from here? Well, I tell you what, if you're getting in at these levels, you could look for some sort of minor retracement, but they've already moved a decent way. To try and stay in the trade, you can have a smaller trade size and probably a slightly bigger stop loss than normal. But to me, Euro's heading down to 114, right? Another couple of hundred points. I was saying this to the team yesterday. I may have even said it in the daily market insight. Sterling is, in my opinion, at least 10 cents overvalued more than any other currency, right? The euphoria around the UK getting vaccinated and this amazing economic growth that we're going to have, and then coming out of Brexit, that's like going to be awesome. Well, you know what? That story has fallen flat on its face. You've got oil shortages. There's massive issues across the economy. Sterling, I honestly think, could be down at 125 within a month, right? This is there's nothing good that's coming out of the UK at this point. So that's going to be, and if that happens, it's going to drag the other pairs down and push the dollar higher. Short term, what do I think short term? Well, as I said, euro down to 114, Aussie down to 70 cents, Kiwi down to 66, sterling, I mean, at least 130 the figure, right? And obviously this is all things being equal. If there's a major change, obviously next Friday week's non-farm payrolls, if those numbers are exceptionally weak, it will stop what's happening right now, and we'll see a retracement. But if they are strong, well, then this thing's gone and you're not going to see the dollar for dust, right? So you got to really start to factor that in. I think the lead up into the next week of trading, the focus is going to be on the non-farm payrolls, and this move should continue. There's nothing to stop it, right? As I said, except some sort of weird left field event, which could be created from a geopolitical event, like North Korea flying missiles all over the place, some other massive pandemic issue, etc. But the writing's on the wall. We've got a strong dollar. It's been backed up with the movement on the treasuries. Now's the time to start to really piece it together and look for levels to get in. You know what? If you've already waited this long, you may have already missed it. So start to look at your daily charts for those longer term levels. Look for, potentially, I mean, you could be looking at economic data releases, looking for, so we've got a strong dollar, right? So you're looking for something that could pull the dollar back just a bit so you can get in at a better level. Maybe that's a euro, maybe it's an Aussie data release, Kiwi, sterling, CAD, for instance. Like dollar CAD, in my eyes, if I just come back to the charts, this thing is like, it's got another couple of hundred points on the top side. It is just starting. But the problem is with dollar CAD, we've got oil, right? It's big, it's sort of remote controller, right? If oil falls, which is going to be a bit of a stretch considering the UK's got massive oil shortages, so that should keep the oil pretty robust. But if that dropped back towards $70, well, then dollar CAD is going to be at 128.50 very quickly. It's the price of oil is the only thing I can see stopping dollar CAD bursting to the top side. So keep an eye, very close eye on that. The dollar pairs, right? So that would be really specific. I mean, obviously the dollar index, but dollar Swiss and dollar yen. You got to think these things are going to continue to the top side. The Ichiban strategy there looking pretty fine at this point. And you're good to see dollar Swiss sort of catching up to its sort of safe haven buddy, the yen, right? So that's it. You're looking for levels to get in. Momentum, whether that's a central bank announcement or an economic data release, I would from here really keep a close eye on the treasuries. right? Where we may get a dollar retracement, you'd think there'd be profit taking before the weekend. Now, if these treasury yields fall, back a bit, well, then we might get a little bit of pressure off the dollar momentarily, and that could be a chance to get into a retracement trade, but it's really going to come from those treasuries. At this point, I can't see anything changing that, right? It looks like all the fund managers are piling in, ready for that, for the Fed to announce their tapering of asset purchases, and it's really going to come down next week to those non-farm payrolls. We get good non-farms, it's all done and dusted. We get weak non-farms. Well, you know what? In this instance, it could be actually a good opportunity because it's only a matter of time before employment catches up. But weak non-farm payrolls gives us a chance to get into an immediate reversal trade and then look for better levels to get long dollars afterwards. So anyway, we'll talk about that next week. Right now, the focus is what I would really encourage you not to do, right? It's a common thing that you see when people miss these opportunities to the top. So they start looking for levels to sell. I said, I've missed getting long. So what I'll do is I'll start selling because it looks like it's gone far enough, right? Same here. You're like, I'll just get long euro because I think it should bounce a bit. The whole thing is it should. There's no reason for it to bounce back. So don't think trying to pick highs and lows is the pitfall of your downfall, right? It'll be the leading cause of why you lose money, right? So doesn't mean we don't see some sort of retracement, but the trend is your friend. So go with it. Don't fight it. All right, guys, have a good one. Cheerio.